Well, it looks like negative interest rates are on their way to the United States of America. Negative rates in the U.S. are something that I've been hoping, wouldn't come. Frankly, if you look at how abysmal the results of NIRP, negative interest rate policy, have been in Japan and Europe, you would think that the United States Federal Reserve, our economic politburo, our centralized financial planners, you'd think that they would steer clear of such a disastrous policy, because what it has led to in Japan and Europe has been total stagnation, both economic and financial. Because over the last decade or so, since the 2008 recession, over a decade now, the U.S. has stagnated economically, been very low growth, but financially, we've been doing fantastic. Stocks have, tripled and doubled and across various indices. But the bond market is on a 40-year bull run. And so the conclusion, that a normal mainstream person, I would think, would draw, not even some crazy, disciple of the Austrian school such as myself, what you would draw from these different experiences when you compare Japan and Europe and the U.S. is you would think, well, it must be the negative interest rates that have led to this stagnation in everything. Of course, there are also people, I guess, who lean more on the demographics argument and say that Japan and Europe, it's a demographic problem, and so their stagnation is unavoidable, independent of negative interest rates. But the Fed, in Jay Powell in particular, the chairman, just as recently, I believe, as the last press conference, has dismissed, the chances that he would employ, any sort of negative interest rate policy, and that, he would make it so that creditors have to pay money to their debtors for the privilege of lending them money, specifically because he saw that this has not had any positive effects, even from the perspective of the establishment in these other parts of the world. And that, the best case scenario we could hope for under any sort of a negative interest rate policy would be Japanification, to where your whole society just sort of atrophies. In Japan, of course, if you bought the Nikkei in 1991, I believe you still haven't really made much money. It's just been flat over that whole period. 30 years of stagnation. But all of that may be out the window, and the Fed may, in fact, actually resort to implementing negative interest rates according to the futures market. The Fed Funds futures market is now pricing in negative rates as soon as December 2020. Now, earlier today, I believe that also the November contract went negative. But as of the time of recording this, I just refreshed the page on the CME's website. The December and everything after that is showing negative rates. And so what that means is that the futures market, which tends to drive Fed policy, if you look at what the Fed has done over the last couple of years in the both in the hiking cycle of, I guess, 2016 to early 2019, and to onto the present day, the futures market has reliably predicted what the Fed would end up doing. And so, for example, I believe back, when the Fed was still raising rates, the futures market was pricing in rate cuts, further on down, the chain. And of course, the Fed eventually did, start cutting rates, and they've now cut rates all the way down to zero. Well, now the futures market is saying the Fed is going to be, cutting rates into negative territory. And the only reason why they would do that is if there's some kind of big economic shock which forces the Fed to do that, because that's the only tool, so to speak, that the Fed has left in their toolbox, to use their language. The Fed has already deployed QE infinity. They've already said they're going to support the entire bond market. They are going to, buy up any asset that, to keep it from going down, in price. They're going to do everything they can to stop interest rates from rising in the bond market. And so the only reason why they would have to resort to negative interest rates is if that didn't work and we still had some big, crash anyway, if we still had some big economic troubles ahead of us that, the Fed will have to react to and will be forced to do something to try and alleviate. And all they can do at this point is cut rates into negative territory. Now you might be saying, well, that's not crazy, because we're in the midst of what looks like will be a great depression. We've got 33.5 million people newly unemployed since this whole thing got started as of today. Again, for the umpteenth week in a row, the unemployment numbers have beat expectations, meaning there are even more people filing for unemployment this week, well over 3 million, like 3.3 million, I want to say, more than were expected. So of course we have economic troubles ahead. Any dummy who just glances at the newspaper maybe every Sunday could have told you that. But the stock market is completely oblivious to all that going on. The stock market now, if you look at the NASDAQ as of today, is back green for the year. And the reason for this, as I've said in the past, is because the Fed's policy really, a big part of it is, in its entirety, the Fed's job is to prop up asset prices. That's, the role that it's been playing for, the past couple decades at least. But in particular, the stock market, because that's the most visual thing. That's what determines consumer sentiment the most, more so than the bond market. Of course, the bond market just has to do with the operations of not only government, but also corporate America. So that's important too, but the stock market is crucial as an indicator to ordinary people on when things are okay and when people can feel good and when they can be frivolous with their spending and in the short term boost GDP by just consuming as consumers do. Throughout the early stages now of this whole depression, the Fed has been able to prop up the price of stocks and inflate them all the way back up to where they were in January. And so my guess here is that if the Fed funds futures market is betting that that they're going to go negative, well, then that means that there's going to be some bad news coming in the future for the stock market. That we very likely will see a retest of the lows of which were just below 2,200, I believe. And perhaps when we get down to those lows, the Fed will be spurred into acting and to trying to pull out one last stop to get the market to stop falling, to make sure that we don't take out those lows and, lower rates into negative territory. Because why, is it now, just when we're getting up into this, this resistance zone here, of just below 3,000 on the S&P, that the Fed funds futures are suddenly pricing in negative rates sometime in the future, sometime actually this year? I imagine that has something to do with the risk of a retest of the lows, and the risk that the Fed will have to do something to prevent the market from taking out those lows, and perhaps even the reality that the market may take out these lows, and that the Fed will have to do even more than just cut into negative territory. All I really know is that I take the Fed funds futures market very seriously, and it seems to be suggesting that this distancing between the stock market and economic reality may come to an end at some point. And of course, that's something that would not at all surprise, people like me. The Fed has done their very best throughout all of this to stop yields from going up, to eternally suppress interest rates and make them continually go lower and lower across the credit market, to force people who ordinarily would be invested in things like bonds to buy stocks because they need that higher yield. And so that's why, despite all of this, economic trouble and horror that we're witnessing, people are still buying stocks. But there likely will come a point here in the next few months, perhaps in the next month, that the market will get to a point to where the underlying economy is just so bad that not even these brainwashed sheeple of investors can convince themselves that stocks are a good price. I mean, we saw this over the weekend with a denizen of the financial establishment, Warren Buffett, coming out and saying that, hey, there's no real good value in the market for me right now. I'm not buying anything because everything is overpriced. Well, duh, it's overpriced. So I'll be keeping an eye on this to see if there are going to be more signs that negative interest rates are indeed on the way, and I'll also try and make sure to see if the futures start indicating that rates are going to be positive again. If if the future rate is implied to be more than 0%, back to in the positive range, I'll try and make note of that at the time. So if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.